You are watching Metropole Television. This is your official economic review. And the conversation this morning is going to center around the president's declaration that indeed listing for loans less than 5 million shillings should be stopped for the next 12 months, and that if you were in default or listed as of last year, then that information should not be included in your credit information this year, all the way to September 2022. And let's begin by listening then to the man himself.
Of the framework by banks has been onerous for micro, small, and medium enterprises, and cash still remains an important payment channel for MSMEs, representing 80% of all their financial transactions. Therefore, accordingly, the implementation of the cash transaction requirement by banks has not been facilitative of the operations of MSMEs, and to some extent has inhibited their growth. And in this regard, I further order the National Treasury, after consultation with other stakeholders, to immediately cause the upward revision of the cash transaction reporting threshold from the current mark of 1 million shillings, applicable to both withdrawals and deposits by customers. The financial institutions, however, will retain their reporting obligations to the Financial Reporting Center. The 11th intervention is to access to credit. Over the last decade, we have developed a robust credit information sharing mechanism for the banking sector, which enables Kenyans develop a credit history to enable them access to cheaper credit. This is an important pillar for pricing of loans.
And that's it. You can actually get to hear him say that we have developed a robust system for credit information. And we do know very well that the conversation around this has been, how do we then improve lending to the private sector and to the households in the economy so that we can spur that economic recovery, which is what we're looking at the performance of the banking sector this morning. And the data says that we have for you here is that in the first 7 months of 2021, you can actually say that in quotes and quotes, the performance of the banking sector has been stellar if you don't factor in the auctions and the provisions for loan losses that have been reduced drastically. Yes, everything that we're going to show you this morning is going to look northwards. But just before we continue with this conversation, let me introduce the panel that is joining us this morning for the entire economic review. We do have RUFAS KAMAU, who's a research and a market analyst, Scope Markets. RUFAS, good morning, sir.
Morning, Simba.
Happy to have you around. We have Tommy Randall, who's a policy analyst. Tommy, good morning, sir.
Good morning, Simba.
Fantastic to have you around. We have ARNOLD NGUSALE, who's a microfinance banker. ARNOLD, good morning, sir.
Morning, Simba. How are you?
All right, fantastic. Lastly, we have Justin MWANGI, who's an investment analyst, CYTONN. Justin, good morning, sir. We're still waiting for Justin to join us, and when he does, we shall be getting into that this morning. All right, so this is the story. President Uhuru Kenyatta on Wednesday announced the suspension of CRB listing for loans that were defaulted from last October, and the relief from blacklisting will last to September next year. The suspension is the second since Kenya reported the first case of COVID-19 disease last year, as the state moves to protect households and businesses from being locked out of credit. Now, the move is set to heavily impact on the Kenyan credit market, where banks and lending institutions have been struggling with non-performing loans. This comes even as the number of loan accounts negatively listed with CRBs hit 14 million in January this year, up from over 9 million in August 2020, and underscoring the struggles Kenyans are having with the repayments, according to the data from the Central Bank of Kenya. CBK data reveals that the ratio of non-performing loans to total loans in the banking sector stood at 14% in June, down from 14.6% at the end of March. Repayments and recoveries were noted in the hospitality and construction sector, some of the economic subsectors that were highly affected by the pandemic. Now, the directive applies to loans worth less than 5 million shillings. That's where we are. Good. Arnold, let me get you to the conversation. And I would like to declare that I'm not in favor of my company, that's Metropole Corporation, that has a CRB wing. I'm not. I am asking this question independently this morning, that when the president says that they have identified or they have come up within the economy a structure that really gives us the information on credit, and then it turns around and says, well, for the next 12 months, effectively, let CRBs stop working. Is this in favor of lending? Is this in favor of the banks? Is this in favor of the borrowers? Who is the president trying to favor, when in reality we should operate within a proper mechanism that is supposed to also make sure that credit penetration is on a high? Arnold.
Thank you so much for this opportunity. So we need to factor in several things. Number one, I think I would simply say it was what you would call a roadside declaration by His Excellency the President concerning aspects to do with the CRB. Now you see, when you're talking about credit, or when you're talking about the SME and MSMEs,
yes,
there's more that you need to have a holistic view of what's going on in the market. So if you come and say that you're no longer going to be considering CRB reports, that simply means that financial institutions have one hand tied behind their back, so to speak.
yes.
So in terms of appraisal of clients or appraisal of businesses, it's like you're telling the financial institutions to ignore what, as far as credit risk is concerned, is a very key aspect of appraisal as
yes,
far as clients are concerned.
Yes.
What we say in banking is this: appearing on a CRB listing is not a sin. So as long as a client can explain themselves and mitigate any issues that have brought them to a CRB listing, then financial institutions will be more than comfortable to lend.
Yes.
At the end of the day, the financial institutions have prudential guidelines and also have responsibility to the depositors on how to manage their funds.
Yes.
So when the president says that the CRB listing will no longer be considered for the next 2 months, I feel like it's the same move which it's a similar move to what happened back in 2016 when there were caps on interest rates. You see what happened after that? The initial assumption was that if you cap interest rates at a certain level, then it simply means that guys will get cheap credit. That did not happen. What the financial institutions simply did, and most commercial banks simply did, they cut their losses and they simply lent to the government and entities which they felt were creditworthy at that particular point in time. So again, I feel that we are likely to see the same effect if we look at what the president is talking about with CRB listing on face value. I think we need a more holistic approach as far as catering for the MSME is concerned. I think back in 2019,
yes,
there was an initiative by the government and several commercial banks, actually Coop Bank, KCB, and I think Barclays Bank, with a certain credit guarantee fund. And even there was an app, a Starway app, which was introduced just to try and give access to credit. I think the implementation of such should be key in terms of assisting MSMEs, rather than coming out and saying that you're no longer going to be looking at CRB listing. You know, at the end of the day, the CRB listing assists you to have a full appraisal of the client.
Yes.
Now, if you remove that, you have a massive loophole, which you may not be in a position to have a full credit appraisal as far as those clients are concerned. So I think it may have a dire effect on the market because the impression is that it will give more access to credit, but in reality it will not. It will simply mean that banks and other financial institutions will look for other alternative ways of lending, appraising the clients.
Yes. All right. Let's put that on the side. Let me bring in Tommy Randall this morning. Tommy Randall, from a policy perspective, let's attack that point from there. You look at your credit environment and then you say, we need to streamline it. You, as a government, says we need to have CRBs in the economy that are going to make sure that then we are not lending in a blind environment. We need to know the credit scores and the credit positions of different MSMEs and individuals before then we can tax these banks to lend to them. That one polices both the borrower and the lender. Fantastic. So now, Tommy, how would you then tell CRBs in the country to do free business for the next 1 year when within law there's a policy that says that this is a legit way for us to run the credit environment in the country?
There was an article in Business Daily on Friday that addresses this properly. It was like a plea to the president to reconsider his position because it was bad policy.
Yes.
In fact, the author of the article called it an edict, and Arnold referred to it as a roadside declaration.
Yes.
So it's really bad policy, and there have been suggestions that have been put forth in Parliament to regulate lending and to be able to see information. Say, they like to say Wanjiko. Wanjiko might not have any history with any bank,
yes,
but needs money. And this kind of policy will reduce the money supply in the market, which Wanjiko needs. So if you're telling the lender that they can't, only information Wanjiko has to offer is information because she does not have collateral. So this will lock her out of the market. And the lenders, what will do is they'll shift their money elsewhere,
yes,
to where there is less risk for them. So in general, it's not a good policy.
Not a good policy. I'm going to come back to you on that as well. Let's cross over to RUFAS. RUFAS, I just don't get it, because lending is not one way. I mean, the banks and the business of business, we have to know that. And in fact, the president himself was behind Starway product, which you and I do know has failed to kick on in the economy. But then, RUFAS, it doesn't mean that when you tell banks not to consider the credit information for the lenders now, for the next 12 months, for the borrower, for the next 12 months, it doesn't mean that the banks now are going to increase their lending within the economy, RUFAS. Are they going to do that? Is that the blanket judgment that the president is making?
Well, I think what we missed over the Mashujaa Day celebrations was that the president announced a massive stimulus package.
Yes.
In order to make sure that there is more money flowing in the economy, I believe he had to force in some way, make sure that there is money flowing within the economy.
Yes.
So one of the biggest hindrances in the economy has been the 14 million Kenyans who have been listed in CRBs. So though the tool was meant to be very positive for the industry, at some point it had become negative, locking low-income Kenyans out of credit. So for the Wanjiko within Kenya, I don't think there was quite a number of options to get loans. If you look at
Yes, we seem to have lost RUFAS now for a moment. RUFAS, I know you can hear me, but we lost your sound in the studio. Yes, I can get you now, RUFAS.
So when it comes to the credit facility, I believe Wanjiko is still locked out.
Yes.
So if we don't force the banks, then they may continue lending to the government only. So
Yeah,
I'm not saying
but
it's
RUFAS,
good
let
policy.
me just cut in on that as well, RUFAS. I mean, the 14 million Kenyans who are listed on CRBs, it's not that the banks don't know them. They already have their credit scores. The banks can still do. Is it not effectively telling the banks then, now find your way and give these people money? Because there was no other law that was included on that pronouncement. It just said do not consider the credit information for the 14 million who are listed between probably 2020 to date. That didn't come with the banks have to lend a certain percentage to the economy. It doesn't mean that they're going to give them money. RUFAS, are they?
Yes. So besides the issue on CRB, he also announced 25 billion stimulus package.
Yes.
So if more money is being pumped within the economy, there will be a higher inflation, and nobody wants to sit on money around because of inflation. So the banks will have to find new inventive ways to lend to the people without using the CRB as a tool. So on my side, I believe it's an economy. In terms of business policy, it's real bad because as much as the government has a responsibility for the people, it also has a responsibility for the businesses.
Yes. Fantastic. Okay, Arnold, let's get back on it then. So let's look at that. I mean, when you're saying that anybody who was listed between 2020 and to date, that information is not going to be considered. And look at that caveat, 5 million shillings. Is that not you essentially saying, do not list anybody? But then what should he have done? Because he didn't also tell the banks that a certain percentage of your loan portfolio has to go back to the economy.
Yeah, I think this is where the STAWI fund, the credit guarantee fund, could have actually come in. You see, at the end of the day.
Yes, but Arnold, it didn't work. Yeah. You and I have no data on how the STAWI product is being pushed. In fact, it's being pushed through the same banks that are being told do not consider credit information since 2020 to date.
Yeah, and that's what I'm saying. You see, as I mentioned before, such moves are essentially counterproductive as far as access to credit are concerned.
Yes.
So, you see, it's okay. There's a caveat of about 5 million shillings and below, and certain considerations. I think the thinking is that the past 2 years have been bad economically because of the effects of COVID-19. However, if you look at it generally, even from 2016, things were still bad.
Yes.
Access to credit was difficult. And part of that was generally because of the greater macroeconomy, bad balance of payments, and the government was in a situation whereby interest rates were really going up. In fact, if you go way back in 2015, what triggered the interest rate capping, we had a situation whereby the country was in a dire situation as far as the balance of payments were concerned. So what was happening was that there was a lot pegged on government paper. Actually, the government was trying to support the Kenya shilling, trying to protect the import cover. So what the government was doing, it was pegging very high interest rates on government paper. So what banks were doing in return back then was that banks were trying to peg high interest rates on their deposits so that they could match the government on government paper. Now, what in effect that meant, it simply locked out people as far as access to credit was concerned, way back in 2016. And that's why things have never really turned at a particular point in time. So we had situations whereby banks had high cost of funding, therefore they had to adjust their position on the assets.
Yes.
Therefore, interest rates actually went up, and it simply meant that because of delayed payments, particularly even from the government, a lot of loans went into default. When that happened, it meant that a lot of financial institutions had a lot of non-performing loans, had a reporting of losses, and some other financial institutions even had to issues to do with capital adequacy because of the provisions that they had to put.
Yes.
Now, if you take us back to now, whereby the president is trying to sweeten the situation as far as MSMEs is concerned, it's more of what should be implemented. Even if you put a caveat of 5 million shillings, how many customers access 5 million? It's a massive chunk of the loan book, of the entire loans that of the entire loans that the banks are holding, of the entire asset base that the banks are holding. So it is really counterproductive as far as that aspect of access to credit is concerned. I would rather have a situation whereby the president finds other partners of implementing the STAWI app if the initial partners are not in a position to deal. So, for example, if you look at the banks which were given that particular fund, these banks are essentially Tier 1 banks.
Yes.
They don't know how to profile MSME clients. The president would have rather looked at financial institutions which deal with the mass market, or even SACCOs, and given those SACCOs a leeway to customize solutions for the MSMEs. As far as the MSMEs are concerned, customized solutions need to be put in place so that they can be assisted. As long as we continue with this conversation of shifting policy, it's like you're just trying to push one dial after the other, hoping that at least one of them will work. It may not be in a position to work, because if you look at the greater economy, it hasn't been performing very well.
Yes.
Now, another aspect will actually come in as far as this conversation is concerned. If we continue looking at the situation as is, we've seen a situation whereby a lot of fintechs took advantage of that particular gap, whereby there was a lot of investment in mobile banking companies coming into the country. It's simply because the MSMEs have not been properly assisted as far as access to credit is concerned.
Yes.
At some point in time, we had a situation whereby regulation was brought that this financial institution would also need to list their clients on the CRB, because for them, they don't look at the CRB listing. They just lend, because at the end of the day, they look at that market as a high risk, and they pay a high interest rate to the same. So if the government doesn't find a way of this credit guarantee scheme getting to the market, we could be on this conversation year on end, and an actual solution will not come into place.
Yes.
Because the financial institution will simply stick to their guns. They have a responsibility to the depositors, to the public, and to their shareholders. So they'll stick to their guns, and they'll choose the path which they feel is the most prudent as far as they're concerned.
Pretty much.
So, yeah, I feel it's more of a matter of finding a way of implementing and customizing these particular solutions.
Pretty much.
For the MSMEs. Thank you.
All right, Tommy Rendo, then clear this conversation. And I'm going to pick a comment that we've just got from one of our funds. Now, the government, and I'm going to read it, that the government should step aside, allow lenders, business leaders, and CRB guys to create a suitable framework for them to do business, then propose favorable policy to government for consideration, as opposed to it coming from the government to the lenders and CRBs within the economy. Is that the way it should have been approached?
Yes, I believe so. And one more thing I have to mention, a shortcoming of the study was that the guarantee was not 100%. It was a very low rate.
Yes.
So it wasn't really beneficial if the government was guaranteeing the loan, but guaranteeing it at a very low rate. And then the process of getting the money back would take a very long time.
Pretty much. Now, Rufus, just in 45 seconds, please, if you may then, can you clear this conversation? Effectively, no listing for the next 12 months if nothing is going to be done about it. What does that mean then for the credit environment in the country? 45 seconds, if you may.
Right. Thank you, Simba. So when it comes to the current situation that we have, as a country, we are surviving on loans. So it doesn't look good when a majority of the people who are working in this country being in debt. So there's need to push credit facilities to the people, mainly the MSMEs. And the interest rates have been low since the beginning of the pandemic.
Yes.
So we cannot blame these on interest rates. So we somehow have to find a way to make sure that money is flowing within the economy. So previously we were saying that the banks were not lending to the MSMEs because of the COVID-19 policies, including the curfew. But now, since we are easing the policies, we need to find a way to push more money within the economy so that we can have a quicker recovery. So one of the policies that have been implemented by the president is currently very controversial, but at the same time, I believe it's going to force the banking sector to sit down, re-strategize, and then find a way to make sure that they push more money within the economy. I don't know how they're going to do it, but one thing I know for sure is that they're not going to sit on the money they have. They'll find an inventive way to make sure that the money is flowing.
Pretty much. Our conversation effectively ends there. You have a comment? You can join us online at Metropole TVK across all your social media platforms. Get your comments in, #BusinessIM. Let's move on to the next issue that we have for you this morning, and it also goes to the banking sector in the country. Now, the Central Bank of Kenya, CBK's lending to banks increased to 55.47 billion in the financial year to June 2021 from 36.94 billion in the financial year ended June 2020. Now, this points to the Central Bank of Kenya improved activity to rescue lenders from a liquidity crunch, according to latest figures contained in CBK's latest annual report. Now, the regulator, however, did not outline the names of the beneficiaries of the support, with previous disclosures showing that the Cooperative Bank of Kenya subsidiary, the Kingdom Bank, formerly Jamii Bora Bank, showed CBK gave the lender a 20.96 billion interest-free loan in the year ended December to boost its liquidity position. Cooperative Bank acquired a 90% stake in Jamii Bora at 1 billion in August last year and renamed it Kingdom Bank. Now, the subsidiary reported 275 million shillings in half-year net profit. Now, the report further shows that by the end of June 2021, 6 banks had already breached the various capital and liquidity ratios. HF Group, Spire Bank, National Bank of Kenya, EcoBank Kenya, and Consolidated Bank and First Community Bank were among the list of banks that breached the set liquidity thresholds by the end of June. Fantastic. Let's look at where we are in terms of CBK's performance as well. That's CBK's financial position. We do have that data this morning. Yvonne, we can take a quick look at it before we come in then with a proper conversation on that. You can see exactly where they stand in terms of total equity all the way to total liabilities and the total assets that stand at CBK. Remember, again, we're going to talk about how even the constitution, the constitution of CBK is also now getting broken as well, just after we come from this conversation. Fine. ARNOLD. So you hear that. Does the number of banks that are in breach of the liquidity thresholds call for a proper consolidation of the sector that carries 30 lenders against a population of about 50 million? Is that what we should be saying?
Yeah, now, several things to consider. Number one,
yes,
the conversation on how much core capital banks need, the threshold,
yes,
is a conversation which again has been going on, I think, for the last 5 years, since 2015. At some point in time, there was a conversation of banks improving their core capital from about 1 billion to 5 billion shillings. And if you look at that particular threshold, it's not an easy threshold for most financial institutions.
yes,
and that's why there was also a talk of a consolidation of, particularly government-run banks. There was talk of consolidation of several banks so that they can have adequate capital, which would enable them to do 2 things. Number one, to lend effectively. Number 2, to meet the capital. And number 3, to absorb shocks,
yes,
any economic shocks that may come.
yes.
Now, if you look at that listing which you just mentioned, it simply means that a lot of, especially tier 2, tier 3 financial institutions, banks, commercial banks, have been struggling to meet that. And why? The question would be why? It's simply because of the position of balance sheets. How much assets do they have in comparison to their liabilities?
Yes.
Most of these financial institutions have what you would call assets which have actually gone bad. And the reason as to why they've gone bad, interestingly, is because some of their clients have supplied the government. They've supplied the counties, they've supplied various government institutions, and they haven't been paid. And the net effect is that when they haven't been paid, they haven't paid their credit facilities. When they've not paid their credit facilities, the performance of these financial institutions is affected.
Yes.
If you look at the situation of Kingdom Bank and Coop Bank, actually, one of the details of that particular transaction is that Coop Bank actually guaranteed the position where CBK funded Kingdom Bank. Actually, it's Coop Bank. It's like Coop Bank gave a guarantee to CBK, and then CBK funded Kingdom Bank. Those are details which may not be in the public domain for now, but in actual sense, that is what happened.
Yes.
And if you look at that bank before COBAC stepped in, it was in a very tricky situation. Back then, as Jamii Bora Bank, it was in a very tricky situation. They had capital adequacy issues. They had a lot of issues, even in funding their position with the CBK from time to time. Because ordinarily, as a financial institution, you're supposed to fund 5% of your core capital with the CBK, and that's how CBK are in a position to monitor how good you are as far as your capital adequacy is concerned.
Yes.
So Bank sort of stepped in to try and alleviate that particular situation. Again, with this other financial institution, these other banks, what the CBK has been doing, apart from just giving assistance in form of concessional loans, they've actually been doing repurchase orders, whereby if these financial institutions are holding government paper, they've been asking them, give us the government paper you're holding, then we give you funds, and then when you're okay, you can get back your government paper.
Yes.
So those repos have also been factored in as far as those transactions are concerned. Now, these particular banks, again, it's the same conversation along the performance of the economy.
Yes.
As long as the economy is not performing very well, banks which don't have either regional presence or regional muscle whereby they can get capital support from a regional office or from an international office, they find themselves in a situation whereby you have to manage your asset base very, very well. You're trying as much as possible to collect from a market which is suffering because of poor economic performance, and at the same time you have to meet certain ratios with the regulator. So what do you do? So it simply means either you find a different niche in your market, or you customize your facilities either with the restructures we've seen or with customized lending. Like I've seen financial institutions which lend to education institutions, and instead of collecting monthly, the installments they collect per term because of the financial cycles of those particular institutions.
Yes.
So I think we are in this particular situation again because of the performance of the economy. And I think the government may need to look at things from a more holistic point of view. How is the economy performing? How is the manufacturing industry? What concessions is the manufacturing industry getting? What concessions is the health industry getting? The hospitality industry, which has been heavily impacted by effects of COVID-19. If these particular industries can get concessions either from a good business environment or tax concessions, then they'll be in a position to fund their positions.
Yes.
With the commercial banks or with the banks, with some of these banks which we've mentioned.
Yes.
Other banks that you were on the listing, like Spire Bank, it's purely because of bad financial decisions. I think for them, it's been a roller coaster as far as that particular institution is concerned. If you look at the investment which was made by Mwalimu Sacco and the management of that particular loan book and some of the clientele which were in that particular bank pulled out. So it simply means that that particular bank has its own problems. But generally speaking, I think most of these banks are ailing because of the general performance of the economy.
Yes.
And also because of some of the fiscal and monetary policies that are in the market.
Pretty much. All right, Rufus, 1 minute, because I want us to carry on that conversation once we come from the book with Tommy Brendo as well. I mean, let's look at that. Rufus, HF Group, Spire Bank, National Bank of Kenya, Eco Bank Kenya, Consolidated Bank, and First Community Bank among some of the banks that have breached the set liquidity thresholds by the end of June 2021. Pointing out to the fact that Kenya is overbanked, because you hear exactly the facts that Arnold is also mentioning, that this could be down to economic performance and also some of the monetary policies that have been instituted in the economy. So should we let the CBK reduce is it a chance for the CBK to rein in on these banks and say, well, if you can't stand by yourselves and keep on breaking these laws, I'm not going to bail you out. Let's consolidate and have you merged or squeezed into bigger banks.
Hello, Simba. I think I lost you for a moment. My connection is not very stable.
Yes. Could you get me now?
Yes.
All right, in just a minute then, if you look at the factors that Arnold has mentioned, is there a chance for the CBK to come in and consolidate the banking sector in the country that we've said for a very long time is overbanked, 38 against a population of 50 million?
So about consolidating the financial sector, I think it's moving faster than we are regulating the sector. So when it comes to the fintechs and mobile banking, right now we are facing a new challenge with crypto. So I believe the technology is moving much faster compared to what we have in terms of the regulatory framework. So if you look at a view in other countries, we know that they're already using artificial intelligence for credit rating, trying to determine how much credit you can have. So I believe Safaricom, among other telcos, are sitting on so much data that could be used to advance the sector, and hopefully the regulator will be able to catch up in time and make it easy for everyone to do business in this country.
Fantastic. All right, now, Tommy Randall, once we come back, now, once again, the Auditor General is telling the Central Bank of Kenya, you are in breach of law. You only have 7 board members out of a possible 11. The president is supposed to appoint 8 of those. He's not done it. You're supposed to have 2 deputy central Bank of Kenya governors. You only have 1. She's asking, what is going on? Not for the very first time, but for the second time. Tommy Randall, once we come back, I'll be asking you, why is the Central Bank of Kenya operating as if they are the friends of the president? Because this kind of thing, we've only seen it from the president. Once we come back here on Metropole Television.